Good morning, everybody. Hope we're doing well. Let's start with a quick review of yesterday. Pre-market, we had a nice little pump off of this support zone up to our 36.21 and 36.30 area. We fell back once the cash, before the cash session opened, we fell back to the middle of that range. And once we opened the cash session, couldn't get going, slipped on down to retest this zone of support and these squeeze bottoms. That's where we started calling out some longs. We hit the 362s on SPY from about 95 cents to $3 on this push back up to that 36.21 through pre-market high, through our 36.39 and up to 36.50, just outside this 1 hour squeeze. Once we started to fall back in, that's when we alerted to the potential for a short back down. All of the puts on the way back down, lit up real fast. The 360s, the 358s, I think they went another 3x off of that dump. We fell right back to this zone of support, set a new low of day just a few cents below, and then we took off back up to close pretty much right where we opened. You can see we are guiding up overnight. You could draw a little trend line from these lows. That would match up with the trend line that is already kind of there. Just to say, we do have some support coming up and some buyer sentiment. Go ahead and get rid of this. We can see that before the run-up we had last week, we fell to this support zone and set a overnight low at that 35.71. And yesterday, on the low that we had in the morning, see that low was 36.80, and then this low was 35.80, sorry, and then this low was 35.79. So you can see we got within 10 points of this previous low, and buyers stepped in nice and strong. Sellers could not overcome the buyers to retest that low, which is the new low of year. So I'm just going to mark it just to make it a little clearer. When we look at it, why did that not take? What in the world? Oh well, I'll worry about that later. Yeah. So either way, buyers stepped in. We are getting a nice kind of W that is forming. So we still have to take out the neckline and recent highs up at 36.68. We do have FOMC today and CPI tomorrow. That is the title of this video. So let's just take a look at the economic calendar to see that we have FOMC today. We don't have Powell speaking afterwards. And then tomorrow we have CPI. We could see a drive up today, a dump tomorrow, depending on how CPI goes. We could also just stay within our squeeze range and the highs and lows of yesterday moving into FOMC. And then depending on the language that it's in that those minutes, we could, maybe see a continuation of the upside. But the big show will be the CPI tomorrow. Should we maybe come down a little bit, that would have a favorable reaction on the market, most likely. We also have some jobless data tomorrow. So plenty coming out at 8:30, and then retail, sales, import price index, and University of Michigan on Friday with some more Fed speakers. So plenty going on this week. Next week, just to start peeking ahead, we do have Beige Book, the federal budget, and jobless claims, and that's kind of it. So, for today, like I said, we had some nice extreme highs and lows set yesterday. That could be the range that contains us going into FOMC, but going to play the price action as it unfolds. If we do get a dip, let's see if this trend line can hold. You know, at about that 36.11 that we talked about yesterday. It was kind of the first target to the upside. And then, 21, 30, 39. So, let's see if trend line can hold at that 36.11. If not, we're going to retest these lows and this zone back at the bottom of these squeezes. But if trend line can hold and we start to catch a bounce, looking to try to fight back up to that 36.39, 36.50, and make it to 36.68. The daily 8 moving average has caught up to that 36.68. If FOMC should give us some energy to get through yesterday's high and Friday's high, which is that 36.68. I'm sorry, yesterday's high and Monday's pre-market high, then it would be a journey to get up to some of these highs from Friday, starting at 36.92, where that daily 15 now sits, and up to about 37.15. We have that, psych level 3700, 3708, key level. This is if we can break through 36.68 on some strength today. We have the daily 21 up at 37.50. But if we start to lose this zone of support, these lows at 35.80 and this low at 35.71, then we could start a slip down to 35.41, 3500, and 34.75, where the third Keltner sits. Those are kind of the downside targets for the week, should we have a not so favorable reaction to what data is coming out. You could also kind of draw a wedge from the highs of yesterday into today, also even Monday. Not shocking to see us wedging into FOMC. So that wedge should help give us some guidance to, are we going to break higher or lower? We could break this early and have a dip for the morning and then maybe a bounce into the afternoon. It could be similar to yesterday. So let's see what we get. Come open. There we go. Still haven't really had any pox stepping down. So that just kind of means that, from the start of the month, there was a lot of volume exchanged up here. POX still sits up there. So should we start to break out today, we do have POX sitting up, kind of near the 21 on most things. A little above the 21. For NQ, has definitely been a little weaker. It did set new lows from where we bounced last Monday morning, right? And we're fighting back up to those lows. I marked a couple of key levels there that we chopped around yesterday, and we're fighting back up to. So let's see if NQ continues to remain weak. If we have a dip, looking for this 10,890. It's kind of where we tried to settle, where we bounced on Monday. Now that we're back above it, it's kind of like a shoulder on an inverse head and shoulders. So let's, on a dip, would like to see that 10,890 hold and this trend line from overnight. If that starts to give out, coming back to test these lows and potentially yesterday's low down on the bottom of the squeeze at that 10,800. But if we can hold up and keep trucking, we have that psych level of 11,000 that we got through for a little bit yesterday. And then if we can get through that up to this 11,070 and 150 where the daily 8 sits. And just like we saw on ES, if we can start to get through these things, then it's back to some of the Friday points that we sold off from where the daily 15 now sits. Past that, the 21 is near that 11,500. If we start to break it down for new lows, next big key level I have is 650, 10,650. And then that 10,500 is third Keltner down. Should we have some negative reactions? Who knows, we could dump today on FOMC, and then, and then tomorrow if CPI is favorable, we could rip right on back. So, on to the Ruddy. Ruddy doing a lot better than NQ from those recent lows. Held a higher low last Monday, had the run up, and now establishing a yet higher low. 3 consecutive kind of higher lows. With the low kind of being around that 1670, which is now the bottom of a 4-hour squeeze that is starting to form on the Ruddy. So, let's see if we have a dip today. Looking for, that 1680, 1670 to hold so that we can establish that higher low and keep trucking up. Already arriving at the daily 8 and 15 near yesterday's highs, kind of where we topped out. So relative strength here, let's see if we start to see the Ruddy give up this overnight trend line. Let me give it a mark real quick. Come on. An alert. This crosses. There we go. Just to keep an eye if Ruddy starts to break down. First, it could, kind of like at open yesterday. If you look at this candle on Ruddy and NQ, they just dove. When we get to YM, you'll see it tried to hold up for a while, had a little dip, and then got going. So it was the Ruddy and NQ that was dragging us down yesterday. So let's see if the Ruddy is weak early. We'll have an alert on this trend line. And if it starts dumping to squeeze bottoms, we can expect maybe the other indices to follow. But if we can keep trucking and start to get through yesterday's highs, we're already kind of getting back to some of Friday's levels. That 1730, 1745 would be next where the daily 21 sits. Would not be a hard move for the Ruddy today. And with FOMC accelerating, maybe we do hold this little uptrend that's forming and push on the Ruddy to get back to the mean. If we start to break down that 1670, wanting that 1656 to hold. We do have that low a hair below that, but overall above this line, and I am leaning towards more bounce for Ruddy and potentially the market. YM. So yeah, here's kind of what I was talking about. YM holding up well too. We've got the previous low before the new quarter, selling off into the new quarter, and this big key 850 that we took off from. Pre-market yesterday, we got near it, and then at open, barely a dip, holding well above some pre-market levels, and then took off up to these squeeze tops, fell down and held those lows. So overall, kind of a neckline here of support, if you will, from these lows. So actually I'm going to mark this level. Come on, Toss. Come on, Toss. There we go. There we go. I like that little 29,136. You could also call it, what is this? 29,115. I'll mark them both just for the heck of it. Which is where the 1 hour squeeze sits. So, just marked a couple of the lows from yesterday, kind of to visualize our neckline a little better on this potential inverse head and shoulders. So, if we have a dip, we'd love to see this 29,315 key level hold near this trend line from overnight. If that gives out, coming back to retest yesterday's lows at this 1 hour squeeze bottom. If we can catch a bounce at either of those, looking to get up through the daily 8 and 15, which we tapped yesterday, this 29,640-ish, and then start to work our way back to that key 30,000 where the daily 21 sits. We could have a reversion to the mean kind of easily on the YM and the ready. If we start to lose that 315 and this 29, 112 to 36, we have our psych level 29,000 and this 28,850. That could also provide bounces at the bottom of this 4 hour squeeze. That's if we roll over and lose this uptrend and can't hold that neckline. We'll come down to test the head and this key level. Past that, that second Keltner sits very close to the low of year. And anything past that, then we're talking third Keltner way down there. Apple. Talked about this, 138, 138.8 in prep repeatedly. That's what we took off from last week. To get up to the daily 8, didn't quite make it to the mean, and now we've held that zone right at the top, barely reaching in at the end of the day yesterday. And now we're up near yesterday's highs. So let's see if Apple can get going through yesterday's highs to get up to this 142, 143, where that first Keltner and daily 8 sit. Key level of 144. And we've got our daily 15 at 146 and the 21 at 147.5. So very easy key levels to the upside should Apple start to break higher. But if market's weak and we start to take dips across the board, then likely coming back to this zone to see if it can hold yet again. If it starts to give out, going to test this previous low at 136.5. Past that, we have third Keltner at 134. AMD. 56, holding, talked about this for a few days. 56, a big key level from back during COVID. It was a big resistance point for AMD, and then it finally got through, so would not be surprised to see us hold 56 repeatedly like we have, and start to scoop back up. It does have a lot of negative headwind with kind of releasing some of its guidance early. We have earnings coming up. The first of the month, next month, so still looking like this one just needs time to settle before we push higher. Amazon, Had a strong dip in the morning for new lows, and then a strong recovery back up near Monday's highs. Kind of settling into this range, and we have some of our extremes from yesterday to set the range to say, if we get down to this 111, maybe this pre-market low 112 would be good risk reward to test along. And if we get up near the top of these squeezes, we switch short. We do that back and forth, leaving runners until it breaks one way or the other. Should we break down, we have this low, that second Keltner at 110, third Keltner down at 105.5. But if we can break back up and get through the daily 8 and 15, up at the top of this 2-hour squeeze, then it's a journey to get back to 119, 120, where the daily 21 sits. BA. Very strong on Monday. Little dip yesterday to retest this little consolidation back here, where we caught a bounce right back up near these highs and right back down. So looks like we're trying to progressively get a little bit better. We are settling into a wedge into FOMC today. It'd be nice to see that 130 hold at open. Would be a strong bullish indication. If we can bounce at that 130 and start to work our way back over 132, with the goal of getting to 134, 135, 136 where that daily 21 sits. But if we start to lose 130, likely coming back to retest 128, should that start to give out, we could come back to kind of fill this gap up that we've only barely dipped into. Filling the gap would be getting back to 126. And we have that second Keltner at about 124.5. Excuse me. Cat was very strong yesterday off the daily 21 and made it to the daily 50. So kind of mission complete for Cat. Been saying we could get up to the daily 50 for a number of days. Finally did. Let's see if it wants to come back and settle, retest the 21 at 176. Looks like we're printing above 180. So it could be an attempt to get to that daily 50 and roll back first. But range kind of set with these squeezes. If we can get through the daily 50, key level above 189, past that second Keltner. And yeah, just kind of been pinned between first Keltner and the 21. So relative strength hasn't come back with the market, just kind of been getting accumulated up here. Let's see if it's for another leg higher. Coin. Big push pre-market, came all the way back. So always expect a little dip when something like that happens. Did a pretty good job holding up these lows of Friday and Monday. Slipped them a little bit, but then right back up near the pre-market highs. Coins, made a good push up with the market. Did not fall back to the previous lows that it pushed up from, so some relative strength holding up with these moving averages. And now acting like it's ready to break out to the upside again. So, on a dip, looking for that 69 to hold, daily 21, daily 8, with the goal of bouncing up to this 74, where the daily 50 sits, and these recent highs. And past that, we have 80, where a daily squeeze top is forming. If we start to give out these moving averages in 64, then we could be talking about the bottom of this daily squeeze. Google. Not too hard of a dip yesterday, just pre-market lows, and then took right back up again. Took off back up to the daily 8 and 15. I know a couple of folks in the room hit that for a great trade. We dipped back and set a new low, but, guiding up well overnight with the market. On dip, looking for this overnight low and yesterday's low to provide support down at the squeeze bottom. If we can keep trucking, the goal is to get through this 98, yesterday's high, the daily 8 and 15, and try to push to 100 and 101, where the daily 21 now sits. But if we start to lose yesterday's highs, we could be coming down to that psych level of 95, where that second Keltner sits, and the bottom of a daily squeeze. We have been setting progressively lower lows, so let's see if Google can start to set higher lows and push higher, or if it's going to make another H. GS. Looks like I had a little dip to about 294, back up to the daily 8 and 15. Came back to retest that 294, now opening above. So looking for that 294 to hold on a dip, send it back to and through 300, 302, where that 8 and 15 sit, with the goal of getting back to 308, 309, where the daily 21 sits. I'm just going to kind of skip through some names here. Meta, aggressively lower lows. It's a decent short when the market's going down, and it, barely finds its feet. Basically, let's just see if it can get through 130, 132 near yesterday's highs, and get back to this 135 where the daily 8 sits. But if we have another dip in the market, likely coming back to this 128, 127, yesterday's low, and that 125 where the third Keltner sits. Come on, Toss. So Microsoft made it back to that 225 yesterday. Made a nice little bounce off of it, back to it, but holding it overnight. So on a dip, looking for that 225 to hold. If we start to lose that, then we're talking yesterday's low near 224. That was ready. Probably breaking down. Let's see. Yes, that was ready. Sorry if you heard that little cuckoo clock. That was already breaking down a little bit on that trend line. So already starting to get our looks lower. Let's keep an eye. I'm going to draw a second. Nah. Either way. Where was I? So Microsoft? Yep, if we start to break down 224, then this 222 and a half, 220 and a half. I've got levels below that. But if we can hold up to this 225 that we're dipping to now, and yesterday's low, looking for Microsoft to make the fight back to yesterday's highs near 229, 230, and back to this 232 that we were holding but gave out on Monday. Netflix. Oh man, this is the one trade I was sad I missed yesterday. Because I talked about if Netflix rejects this 8 and starts to head down through 225, we can get to 220, 215, and that is what we got. Those 210 puts went like $1 to 420. So that was definitely one trade I was sad to have missed, since we talked about it in prep, and I was saying it could be due for one of those dips, since it, fought up and tried to stay in this range, and it's slowly breaking down. So we made it down to the bottom of this daily and 2-day squeeze. After such a big drop, want to let it settle and find buyers. But we'll be watching this for potential long back up to the squeeze top, back to 250. If the market can, hold up, and if FOMC and CPI go well. To the downside, you could play it to that 207, 200 if it gets down there, but we could try to hold up above 210 and this squeeze bottom and start to reverse. Nvidia, like AMD, sold down to a range and now just trying to settle in that range. Basically, you can play that range until it breaks. I'm going to kind of leave chips alone for now. QQQ. Come on. So already dumping down to 30-minute squeeze bottoms. We do have the hourly, 2-hour, and a 4-hour just below that, near yesterday's lows. So if we can't hold this 30-minute squeeze, going to slip down to these other squeeze bottoms and yesterday's lows. Maybe even tag this 260 at the bottom of that squeeze. But if we can hold that 260 or 262, looking forward to bounce back up to these squeeze tops. Pre-market highs near 266. Yesterday's highs 267.5. 268 at the top of these squeezes. And if we can get through, psych level 270. And we have the daily 8 around that 272-ish. Daily 15 up near this zone at 275. The SPX. Slip down to some new lows here near 3568, 3570 in the morning, but then once we broke back over this 3587, it was right up to the next key level, almost making it, running to a squeeze top and then back down. Is our gap up still gapping up? Ever so slightly. So let's see on a dip if this 3587, 3568 making a zone of support right around this second Keltner as well, which will likely be stepping down in the middle. So let's see if these key levels can still provide support, start to bounce us back up through 3600, 25, 45, and if we can get through that 45, then looking to get to that daily 8 at around 65, daily 15 at around 3690, and we have psych level 3700 and gaps above that. Should we break down new lows? Next key level 3523. Whoop. I was on SPX. Let's go to SPY. So giving up overnight trend. Let's see. Yep, already kind of below that. Just like we discussed on QQQ on SPY, let's see if we can hold this 30-minute squeeze bottom. If that starts to give out, we're likely coming back to retest some of yesterday's lows around this 356 at the bottom of these squeezes. We have psych level 355. So if we give out here, that's the next zone of support where we could bounce. If we can get going back to the upside, first stop 360, 362, 365, where the daily 8 sits. If we break down through that 56.55, we do have a 4-hour starting to form near 354. And if that finally gives out, 350. Tesla. Ooh. Yesterday slipped down still for new lows. If we start to take out those lows, we're talking 210 and 200, which are big key levels. Still has this whole Twitter thing, some negative news going on, and they're just not loving it and really not doing much with it day in and day out. So, just kind of letting it settle personally, seeing if it can find its feet, because we only would have to get back to about that 233, 235 to test the daily 8, and that can be a decent bounce when it happens. The risk to reward going further short is just, looking like less and less. Like if you could have caught it at 224, you got down to, you got about a 10-point move yesterday. But overall, kind of giving this one a break as well. UVXY. We had our little pop up first to test these highs, rejected, came down near these lows and bounced. Kind of a flag, right? A bit of a bull flag that we're starting to pop up. So, for further downside, UVXY likely will get up to retest these highs near 13.5, with the goal of getting up to this 13.8 at the top of these squeezes, stack squeezes. 13.814, if we're going to see more downside in the market. But if we can kind of reject this 13.5 and come back down below 13, we could see a nice bounce in the market. To push higher through squeezes on the market, we'd need to see UVXY get down to about this 12.5 at the bottom of these squeezes, at least, where the daily 8 sits. And VIX. Looking like we're going to be opening above 33.5. Let's see if we have a quick pop up to test yesterday's highs near 34.5. And if we keep slipping in the market, we're talking 35, 35.3. But if we can get back below 33.5, start to give out this trend line of support from yesterday's low and overnight lows. Looking to get below 33.5, take out 33, on our way back to 32.5 in the bottom of this range. And then past that, we do have a gap to fill back to about 31.5. So for upside, need to see VIX come back down near yesterday's lows and get to these daily moving averages. That's it for today. Thanks everybody for tuning in. The beast tools have already been dropped. So yeah, we'll see everybody in chat.